How's it going all? Welcome back to the channel. So as many of you know, the stock market has not been doing very well this year. The S&P 500 is closing in at about a 25% loss year to date. And for anyone in crypto, popular assets like Bitcoin are down nearly 60% this year alone. So it's definitely a tough market out there, especially with interest rates continuing to rise and equity prices continuing to fall. But you know what has been skyrocketing lately? Yields on fixed income assets. These have been amazing for a lot of savers, especially for those of us approaching retirement or parking our cash to save up for some large purchases. And right now, we could easily get a guaranteed 3 to 4% interest on our money, which is quite phenomenal and actually a very rare opportunity that we haven't seen in quite some time. Now I know fixed income assets isn't super interesting, especially compared to talking about Tesla or Apple stock. But truth be told, getting a 4% guaranteed risk-free return is actually pretty good and very appealing to a lot of people. Now, the S&P 500 historically has averaged about 10% each year, but it certainly has some down years, kind of like what we have right now. And not everyone is comfortable potentially losing their principal in the short term, so fixed income assets like bonds and treasuries can be a really good option to smooth out that volatility and help anyone saving cash for the short term by getting a nice high interest rate. Alright, so how exactly do we get that guaranteed 3 to 4% return? Well, one of the simplest options is US Treasuries. And for those of you who are new to fixed income investing, treasuries are US debt. In other words, this is when you lend money to the US government in exchange for a relatively high interest rate and tax benefits. What's nice about treasuries is that because it is US debt, your money is fully backed by the US government. And you could actually potentially deposit millions of dollars and be fully insured, unless of course the government defaults on its debt, which would be rough for all of us living in America. But because that risk is so low, many individuals and even large companies will purchase treasuries, especially because it's a very good way to preserve your capital while earning a high interest rate and saving on taxes. And what's special about treasuries is that the interest you earn is exempt from state and local income tax. So for example, if you are a high earner in California, you could actually get those tax exemptions, which can save you quite a lot of money. And finally, a lot of people like treasuries because you are guaranteed to be paid back your principal plus a little bit of interest on maturity date, something that you don't quite get with even bond ETFs like Vanguard's BND. And that's why it's incredibly appealing for a lot of us that are approaching retirement or saving up for some big expenses like saving up for college or buying a house. And with equity prices continuing to fall as a result of quantitative tightening, having this guaranteed way to earn money is very attractive for a lot of people. Especially since you could actually make a little bit more than what you would get with a traditional high yield savings account or a CD. And one of the easiest ways to buy them is through TreasuryDirect. This is where you can purchase treasuries directly from the US government. Now, to be honest, I have a lot of mixed feelings about this redesign of TreasuryDirect. It definitely looks a lot nicer, but at the same time, ironically, I actually find it harder to navigate. So personally, I thought it was a good time just to kind of like give you a step-by-step tutorial while also showing you all of the relevant information to help save you a lot of time. So to find the current auctions and the interest rates of Treasury bills, notes, and bonds, you can hover over auctions and select announcement, data, and results. Scrolling down, you can find that 4-week T-bills are currently offering about 3% APY. This is an example where you can lend your money to the US government for 1 month and earn 3% annualized interest. And this is pretty good and actually 0.5 to 1% higher than a lot of traditional high yield savings accounts on the market today. And of course, longer durations should pay you higher interest because you're locking up your money. So as a result, 8-week T-bills are currently offering about 3.3% APY, and 6-month T-bills are offering over 4% annualized interest. And of course, 1-year T-bills are offering the highest at about 4.25% guaranteed returns. And that's pretty incredible stuff. And over the last month alone, the yields on treasuries have increased about 0.4%. And with Jerome Powell signaling that he's considering more interest rate hikes, I personally wouldn't be surprised if we start seeing 3.25% APY on 4-week T-bills and something like 4.5% APY on 1-year treasuries by the end of the year. And as always, if you want an in-depth step-by-step guide on how to buy treasuries and open an account, definitely check out my more dedicated video here on this channel. But if you have a TreasuryDirect account, you can go to Buy Direct on the upper tabs. Select the duration that you want to lock up your money for. T-bills have durations of 1 year or less, T-notes have durations of 2 through 10 years, and Treasury bonds have 20 and 30-year durations. Personally, I find that the only useful ones for individuals are often Treasury bills and in some cases Treasury notes. T-bills are nice because they're essentially the same thing as short-term CDs, but with potentially better rates and those tax benefits. Treasury notes can be a really good option if you want to lock in a higher rate for a longer time, but with rates continuing to rise, I personally don't find them quite as attractive. But once you find the range of durations that you want to lock up your money for, you can then select Submit. I like T-bills, so I'll use just that. Then you can select the duration that you want. The options are 4-week, 8-week, 13-week, 26-week, and 52 weeks. And that corresponds to locking up your money for 1 month, 2 month, 3 month, 6 month, and 12-month durations. Keep in mind too that your money is locked up with the US government, so definitely come in with a strategy and make sure that you have some excess cash savings in case of any emergencies. The auction date is when the treasuries are auctioned off to individual investors, companies, and foreign governments on the secondary market. And this is also when the US government sets their prices on a treasury bill and tells you your expected interest rate or your expected return. A few days later, your bank account is debited and you are issued your T-bill on the issue date. So for me, I'll just deposit $1,000 for a 4-week T-bill. And what's nice about TreasuryDirect is that I can also reinvest my treasury bill. So for example, if I need the money ASAP, I can have that money deposited into my bank account after those 4 weeks to pay off my credit cards. But if I don't need the money, I can have it automatically reinvested in the next available treasury bill. And interestingly enough, some people are really good at this and actually use 4-week treasury bills as a pseudo savings account. And many actually create their own treasury ladders to make sure that they have a lot of liquidity while earning a very high rate and getting those tax benefits. So this reinvestment option can be a really big plus. And once you're done, you can select your bank account as the payment destination, and voila, you're all set to earn 3 to over 4% guaranteed interest on your cash. And of course, for more sophisticated investors, there's brokered treasuries as well, which are paying a little bit more, but are a bit more complicated. So if you want to learn more about those specific products, definitely check out my more dedicated video here on this channel. But as always, thank you so much for watching. Don't forget to subscribe, and I'll see you next time. Have a good one. Bye-bye.